Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. How's it going today? Hope you're having a good day here today, and I want to just kind of bring to light some things that, I get questions on all the time. You could schedule a call with us right on our website there, and a lot of times I'm the one that gives you a call. And you notice patterns, you notice themes, and for a while it was pot stocks. For a while it was knowing how much to save for retirement, this sort of panic around how much money you should put away. Of course, there was the cryptocurrency phase, and then October through December, of course, it was, hey, the markets are falling, what do I do about this? Well, now there's a new trend starting to develop, and a lot of it's just driven by politics, really. The infrastructure plan. Many of you know that Washington is likely going to try to start turning the narrative towards infrastructure as we head into election season. Good luck. Hang on tight. Here we go. So I thought I'd spend a minute just covering a few things here to see if it's something maybe you want to take a look at. Now, none of this is a recommendation to buy any of the following things that I suggest. It's, of course, just to let you know what's out there, and you could do your own research, talk with your financial advisor, and see if it's something that you'd like to participate in. Or that fits your goals. If you're one of our customers here at Jazz Wealth, well, you're already one step ahead of the game. We've got you covered, so you're largely participating in the mix of a lot of the stocks that I'm about to mention inside of these ETFs. Well, Friday, so this video is coming out here to you on a Tuesday, but Friday, May 10th, the Pentagon released another $1.5 billion to build another 80 miles of the wall, the wall that we're supposed to be building between U.S. and Mexico. And a lot of that's kind of gone not really talked about, right? Seems like nobody cares anymore, but yes, there's some debate still in Washington. Nonetheless, $1.5 billion just released to continue building the wall, 80 miles to be exact. And a lot of people say, okay, well, that's part of what could be infrastructure. Maybe that'll be a negotiating tactic by Trump. But we just heard that the Democrats and the Republicans actually agree on spending money on infrastructure. Not only that, they agree on the amount, $2 trillion they want to spend on infrastructure. Now, not only could this be great for the U.S. economy, also the U.S. stock market, but in particular, it could be great for infrastructure stocks, right? Everybody's going to get a little piece of this $2 trillion pie. The Democrats have basically said, we're on the same page as you, Trump. Just tell us how you want to pay for it, and we'll vote it through. We'll see if we can agree. Well, there's a couple ways you can look at this. You can go look for individual infrastructure stocks. Don't forget energy. Don't forget utilities, transportation, industrials in there as well. Or you could look at an ETF. So we did a little research, and we said, well, are there any good ETFs that you could use to participate in there? And I want to go over a few of them with you here today. The first one, and the largest one, is the IGF. This is the dominant player in the infrastructure ETF category. These guys have about $2.5 billion under management, which means you're participating with $2.5 billion other dollars. That's pretty good for an ETF to have that much money flowing through. So that's pretty good. Expense ratio is about 0.5%. It's actually 4.47%, which is a little below average for sector ETFs, if that's something that you're considering, if costs are an issue for you. This is about 40% in the transportation space, and about 40% split, I know that's only 80%, but about 40% in the utility space. So they do have a little bit of a spread there. This is a global ETF, by the way, so although it's the largest, the most liquid, the biggest player in the space, you are participating globally. 40% transportation, 40% utilities if you're going to play along there. There's another one out there, and it's the GII. It's about 1/8 of the size, by the way. They're looking at about $340 million at last check under management. So it's a smaller ETF, but it's also a little more focused. Now, cost-wise, you're going to be at about the same price there. It's 0.40 in terms of the expense ratio, so not really a big enough difference where you would choose one over the other, in my opinion. But this ETF is more index-based. So this has a little tiny different approach than the IGF over there. What these guys want to do is they say, look, we're going to have 75 positions. That's our focus. I think right now they have 76, but in general, their mandate is to have about 75 positions. And what they want to have is 75 of the largest transportation stocks out there. That's their focus. Transportation, that could be in the energy space. It could also be in the utility space, but in general, transportation stocks overall. So really, in my opinion, the top two, these are the top two in terms of size. These are really the only two you have to choose from. IGF, $2.5 billion. GII coming in, of course, being smaller, but coming in a little bit smaller there as well. One of the things I wanted to point out to you is the GII is market cap weighted, a little bit different there than what they're doing in the IGF, and because of that, has a slightly better performance in the short term over the last year or so. So you're not missing out on too much by choosing one over the other. Also, the GII has similar holdings as the IGF, but because it's market cap weighted, you're getting a little tiny bit performance over there. That doesn't have to stay that way long term, by the way. That's just where it's at currently at the moment. Also, I should point out that these two funds have a dividend yield that's around 3%. The GII actually has the highest at 3%. The IGF is a little bit lower. So again, not recommendations in any way, just something maybe you feel passionate about as well and something you want to participate on. And I would say, is your advisor helping you with this? Are they helping you understand what your potential choices are? If that's the case, then maybe you want to have that conversation, or maybe you already have. If you go, hey, I can't have a financial advisor, man, I'm just a small fish in a big pond. Well, that's what we started out to do here at Jazz Wealth. We want to take the same help, advice, tips, and tricks, the same methods used to grow your net worth that people get when they use like Goldman Sachs because they have a lot of money. But we wanted to bring that to everybody. And so one of the ways we do that is, of course, teaching you here, but we do weekly classes for our customers as well so that we can further teach them how to not only make sure their investments are going well, but also to help them grow their net worth. That's all I really have for you today. I hope that helps you in some way. If so, maybe you'll hit the subscribe button, or if you need the kind of help that we offer, maybe you'll check us out at Jazz Wealth. If none of that sounds good to you, well, I hope you at least learned something today. Enjoy, and we'll talk to you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.